When you're filling out the IRS Form W4 as married filing jointly, where you and your spouse have a job, if you're going in and updating your own W4 because you have a new job or just want to update it, you also need to make sure that you're updating your spouse's W4 at the same time. If you don't, the math is going to be wrong. So in this video, I'm going to walk you through an example so you can understand how this works and why this is so important. So I'm going to use an example right here, and I'm going to show you how filing is married filing jointly, where one spouse earns $90,000 per year and the other earns $60,000 per year, bringing that total to $150,000. And I'm going to use the online estimator, but I'm not going to walk through the entire online estimator. I'm just going to show you the results and what you should look for, and also answer some other questions that you probably have about the W4 when you're married filing jointly and you have multiple incomes. So let's go ahead and jump right into this, and I can show you what I'm talking about. So here I've already gone and entered in all of the information on two different screens here, one for the $60,000, one for the $90,000. So this one is for the $90,000, and what we can see right here are the results. So the expected tax withholding is $7,250, pretty close to what we project will be our total tax liability. It means at the end of the year, we're just going to owe $34 in this example. And the same thing for the $60,000 earner. The anticipated tax withholding is $3,600 throughout the course of the year, and the total anticipated tax obligation is $3,684. Means that we're going to owe $84 at the end of the year. So just to point this out, what are the differences in these two numbers one more time? The top number, the expected tax withholding, that is the amount that you're already withholding from your paycheck. So if you continue to do that, this is just telling you how much money is going to be withheld throughout the course of the year, given what you're already doing. That second number, the anticipated tax obligation, that is the actual number that you should be withholding. So the difference there is the amount that you're either going to get as a refund, or in this case, the amount that we're going to have to owe. So that is the difference between those two numbers and kind of how they work. So let's go ahead and take a look at this again. So with this, we have our anticipated tax obligations. Now, the reason I set it up like this is I went in and I put in as married filing jointly. I didn't put it as single. I still put it in as married filing jointly and entered in the income with looking at your pay stub to see how much we're withholding. I just made it up for an example so you can see how this all works. But we did not add that second job. Both of these printouts or these walkthroughs right now are only showing this one job. And notice right here, when you check off married filing jointly on that first screen, it's going to say how many jobs will you and your spouse have this year. Now, here's a question I get a lot of times, or some concern behind adding your spouse's income, is that you don't want your employer to know. They're not going to know. They might be able to figure out, like, okay, there's something else going on with your taxable situation. They likely don't care or not even going to look at it. They're just going to give it to the payroll department and have them do the math. But it's unlikely they're actually going to be able to figure out how much you actually are earning throughout the course of the year. They're just seeing these adjustments, and you're going to see that as well as we go through this walkthrough. So right now, we have a total amount of $7,250. Plus, we have the, over here for the $60,000 job, we have $3,600. Now, I already did the walkthrough bringing them both together. Here you go. So the anticipated tax obligation of what we're currently doing, if you added those two numbers up, you're going to get $10,850. The anticipated tax obligation, however, is $18,536. That means we're going to owe $7,686. And that is because we didn't bring them together. In this walkthrough, we did. So you could see how drastically different it is if you're just going in and trying to fill out your own W-4 saying, hey, I'm married filing jointly, here's my income, I don't want to tell you anything else. Well, guess what? It's going to be significantly off because that's exactly how I just set this example up. And if we go ahead and take a look at these printouts right here, if you scroll down, you're going to see both jobs. It's going to give you the link for the first job. You can see right here, $90,000. It's this link for the W-4. We'll click on it in just a second. And the second one is for the $60,000 job, and that is the W-4 here. You want to update these both at the same time. Let's go ahead and take a look at these, and I'm going to show you what I am talking about. So here is the $90,000 job, and you're just going to have to fill in your basic information. But right here, it already did it for you. Leave everything else as zeros and blanks, whatever you put in. I don't even care if you have 12 children. Don't enter anything else in. It doesn't matter. Just leave it blank. If it's blank here, leave it blank because you've already entered it going through the walkthrough. Just put the $600 on this one, and we can take a look at the second job, and that one is going to have put $304. Why? Because we need to play a little catch up here because, remember, we're going to owe this $7,686. So if we want to get a zero refund, have to pay zero, then that's why we're going to pay a little bit extra. That's why we have these two numbers. But no matter what, if you're going through the walkthrough, just put whatever the answer is at the very end, and it's going to be as accurate as possible. So if you haven't followed already, you're not double counting anything. Putting your spouse's income when you're doing the walkthrough, it's not like you're adding your spouse's income on your W-4 and then doing the same for your spouse's. You're actually putting them together to get two separate printouts that will help allocate the tax withholdings to each of your W-4s so it's literally as accurate as possible. And again, if you're going through this and you have kids like I do, you're probably going to go to the second section right here, the tax credits, and add some dependents in here. That is fine, but if you get to the end and it does not have a number here, do not do this math. Do not multiply the numbers of qualifying children under the 17 by $2,000. That is directions that are just kind of misleading. If you don't have to even take my word for it, just go to the IRS's website and they'll tell you that using the online estimator is the most accurate way of doing it. But this is the only way. It's not more accurate by putting both of your incomes on there. You basically have to do it if you want it to be remotely accurate. It's just going to be inaccurate if you do it any other way. So let me know if this has helped. If you've enjoyed this video, be sure to subscribe, and we'll see you on the next one.